All right, Coach Charles. Here we go. I'm just gonna show you from my screen. I'm gonna go over here to the Thinkorswim tab right here. This is basically TD Ameritrade. When you open an account, you can download the platform. It's free, and you don't have to like log on to Google or Safari or anything. You can just open it from. It's like it becomes a desktop icon. Right. So right now, what I can do is I can go to live trading account, which is real money, the account with real money in it, or I can go to the paper money account, which is where I spend like pretty much all my time right now, um, practicing investments and scenarios and stuff like that. The one downside to paper money is it's not real, obviously, and like in saying that, you're not really sure what prices you can get certain stocks at because it'll sell it to you, but it's not a real scenario. So anyway, let me show you how I do the trades. Enter my information right here. And so now it's loading up. So you can just wake up, open your computer, and um, log on, and it'll open right up for you. When I first opened this thing up, it looked like it took me a long time to learn it, but it's pretty easy to read. But I'll just I'll guide you through it real quick. So you have a little, news page here. I usually just close and get out of here. And then basically I just set up a bunch of stocks and stuff that I watch because I used to look at like doing weekly trades and stuff like that. So these are still up here, but basically this symbol right here is the S&P 500, and yeah, that's basically the chart. If I go over to analyze, if I go to margin, all right, you can see here that right now the position I'm in with this is the NDX, this is the NASDAQ 100 index. On this position, I'm down 900 bucks on this position. When the market kind of crashed last week, it went all the way down 4,000. So now I'm only down 900, which is good. I'm holding on to this position right now. It's got the delta of negative 17. Delta means direction of the stock. Theta is when I'm making daily just for holding the position, and Vega is for represents volatility of the stock, which I can explain to you if you need later. But basically, this is where I'm at. I'm at the NASDAQ 100 index. You see my positions right here in the middle. If I reset the slices, right now on as of Friday, this position, this index was at 2909.60, and basically I'm right in the middle, which is where you want to be because you don't want to be too close to one side, too close to the other side. The green line is where I'll be at expiration. As you can see, expiration is right down here, July 19th. Options expire third Friday of every month. The monthly ones do, but they're weeklies and quarterlies. But for the sake of this, there's the monthlies expire the third Friday of every month. If I hold on to this, I'll make $4,500. Considering how bad the market has been this month, I'll probably not hold it that long. But as you can see, like right over here, my buying power effect was $22,500. So that's how much I need to set aside in my account to hold on to this trade. And basically, I'll make $4,500 on $2,200, which means 45 out of 22,500 equals 20% on this trade. Now what I did is I had set one side up first, so I had this side up, and then when the market kind of tanked a little bit, I went all the way over here, so I put this other side up, and just for the protection, so to mitigate the loss. And so now that's why I'm at where I'm at here. I'll probably wait to hit about $1,000 or something because our daily appreciation value is going to be speeding up because we're getting closer to expiration. So, but basically, here's where I'm at. 719. This trade has 64% probability. I look at the charts and see where that puts me on the 19th. Charts. And basically, let's see, we're going to look at the daily chart. This is the weekly chart. Basically, I have to stay within these 2 points for the next couple of weeks. If I don't, I'll have to make an adjustment to change it. But as long as I do, I'll be taking in that profit. There's a couple other things I can do, like this is a higher risk trade, which is why it pays like 20%. Pays more money. But what I can also do is I can set a real quick trade up with the S&P 500. And by the way, I like doing indexes because with stocks, it's too hard to track, too hard to follow. They can either crash in one day or be bought out, and the price can completely change. Whereas indexes, you don't really get that, and also the tax treatment is more favorable when you're trading index. Anyway, I'm gonna look at the weekly. Let's see. I like trading about 40 days out, but I'll look at the weekly for the S&P 500, and all I'm gonna do is I'm gonna set up an iron condor, right? I look at probability. So here's probability of being in the money. This is all algorithms basically that are telling you probabilities. In the market, past never predicts, tells you the future. I'm sure you know that, or you've heard that somewhere. But basically, I stay at around 10% probability on the downside, and then I go up and I stay around 10% on the upside. So that puts me at about 1695. We'll just say 1700, or we can say 1695, and then on the upside, and then 1440 on the downside. So 1440, 1700. So we're going to trade an iron condor. So I'm going to start right there. I'm going to come over here. I'm going to analyze the trade, right? I have to make the adjustment down to 1400 or 14. What was it? 1440. 1430, 1700, about 1710, and that puts me, well, I kind of want to be in the middle. So when I look at this, let's see, I look at the break evens for August. Let's change the date over here to August to see the probability. What is it? August 16th. I can see that there's an 80% probability this trade is going to stay between these two lines. On $860, I can make $140. See down here in the bottom left corner. And then basically, like, if you just want to do more contracts, say you want to trade, well, let's say you want to trade $7,000, you'll basically make $1,200 for a $7,000 investment. But on this side, I kind of want to, if I look at the charts, since I want to be in the middle, this is kind of a long way to go down. Like there's a support line right here. There's a support line right here. And there's another one like right about here. So I'll probably go up to like 1,500, maybe even 50. No, I'll just go up to 1,500 just to be safe. So I'll do this. Change this right here. 1490. Alright, so that leaves me $1,800. And then on the upside, I might want to go up a little bit. Maybe 1710, 1720, just to be safe. And basically 1700 out of 7290 in about 40 days. But I rarely keep trades on for that long. This expiration right here, theta basically stands for time decay. You're going to be making about $33 a day for having this money in the market right here. 1700 what is that, 1710 out of 7290. That's about 23%. So what I also like to do, because if the market just like we have a nuclear war and it crashes, you'll end up over here. So you'll be down like $5,000. So what I like to do is I like to, even though it probably never will happen, it's kind of like insurance. So I'll just buy insurance right here and then set it up so that it protects your position basically. Let's run the 1605. We want to go under 1500. So I'm gonna go like 1495. It'll cut in your profit a little bit, but it's much better than not having. It's much better cutting in your profit than to have a bigger loss. So instead you'll make 1300. But if market crashes, this white line represents if it crashed today, you only be down, $386 instead of having no protection and you're down 5,000. So that's kind of one thing that I do. And then if we just want to do one side of the trade, I can also set it up like this. Like if we're bearish on a trade, we kind of feel like the market's just going to keep going down, down, down. Usually I just set up what's called a vertical spread, one-sided spread, and basically if the market crashes all the way down, you're fine. You're good to go. So you can come all the way down to like zero basically, and you'll make $1,800. Or same thing on the upside. I could do a single-sided vertical spread, and we're all the way up on this side. If everybody buys into it. So that's what I do, along with some other more complex trades, and basically I just watch the market. And this kind of thing, there's not a lot of maintenance required. It's just a few minutes a day basically. Once you put the trades on, it doesn't really take that long to do. And before I put a trade on, I just kind of look at how the market's doing. This is the advancing issues in the market. As you can see right here, it was down 187, so it was down a little bit on Friday, but it's green, so it was still kind of bullish. Anytime it's way up here, it means the market is going up. It's way down here, it's going way down. So anyway, so that's it, I guess, for today, or until next time. And over here was my $5,000 account. I have 2 positions on here, and basically, the Nasdaq's over here. If I hold it for a couple more weeks, I'll make 690 on 5,000. Or I can adjust it. And then let me take off these scenarios. This is a different kind of trade that I'm doing that I'll tell you about another time. But yeah, anyway, that's it. And hopefully that's kind of makes sense a little bit. But basically, the thing I liked about these trades is that you can basically set them up. I can set this up in a couple minutes. Oh, I had it on there. It must be off. I can set it up in a couple minutes and see how much I can make if I set it up. So I can set it up and say, okay, I want to put 22,000 down. If I put 22,000 down, I'll make that much in this date. And that's what I like. And if I don't like where it's going, if I'm like right here and I'm like, I don't really know about these two, I can just sell it, take the loss. Sometimes I'll be profit only a few $100, but leaving a couple $100 profit is better than losing if you don't feel like being in the position. And right here is the calendar. So as the days go by, it kind of shows you where you'll be at in terms of profit. So if we hold it for till the 9th, which is a couple more weeks from now, you'll be at 1,800. If you're somewhere along this line, you'll see what your profit will be. And if you don't like it anymore, you can just take it off. And that's basically all I do, and that's basically what I've done since November on this account. Is you see here my catch and sweep is this is a scenario. This is fake, but it's 163,000. And then I started this like in November with 100,000, and that's how much I've made. I'm not able to see how much. Let's see, 118 filled trades, 59 canceled, and then options, profits and losses. Doesn't really give you a breakdown. Maybe it will if you do it, but yeah, that's it, Coach, and hopefully you understand. And give me a call. Let's get this going. All right, see you later.